Workers at a Georgia Hyundai plant describe a chaotic scene after an immigration raid at the facility. Federal authorities say Thursday's raid was the result of a months-long investigation by several agencies.
Foreign car makers like Hyundai and BMW to be opposed to imports.
The U.S. auto market is on the brink of chaos after shocking reports revealed that Hyundai, one of the world's biggest car makers, is seriously considering leaving America altogether. Sources point to escalating trade tensions, rising tariffs, and unpredictable policies under former President Donald Trump as major factors pushing Hyundai toward this drastic decision. For decades, America has been a crucial hub for car manufacturing and sales, but now the industry faces an uncertain future. The possibility of Hyundai exiting the U.S. not only threatens thousands of jobs, but also sends shockwaves through global markets. Analysts warn this could trigger a full-blown auto market crash, with devastating consequences for both consumers and the economy. In a stunning development shaking the global auto industry, Hyundai is reportedly weighing the possibility of withdrawing a major part of its operations from the United States. According to insiders, the company's top executives have been holding high-level meetings in Seoul, exploring scenarios that could see future investments, production facilities, and even new model launches shifted away from the U.S. market. The trigger? Former President Donald Trump's escalating trade and tariff policies. Over the past several months, Trump has called for aggressive tariffs on imported vehicles and auto parts, arguing it's a matter of economic security. But critics say these measures have backfired, raising costs for manufacturers and consumers while creating an atmosphere of uncertainty for global car makers like Hyundai. Hyundai, which has invested billions in U.S. plants over the past decades, now finds itself squeezed between rising production costs, unpredictable regulations, and shrinking profit margins. Company officials have reportedly warned that continued instability could make the U.S. market unsustainable for long-term operations. The potential exit would be a massive blow to the American auto industry. Hyundai employs tens of thousands of workers across its U.S. assembly lines, dealerships, and supply chains. States like Alabama and Georgia, home to key Hyundai factories, could face significant economic fallout if the company scales back or relocates production overseas. Wall Street analysts say even rumors of Hyundai's departure are rattling investors, as the U.S. auto market struggles with falling sales, rising interest rates, and supply chain disruptions still lingering from the pandemic era. A Hyundai exit, they warned, could trigger a domino effect, leading other automakers to reconsider their U.S. commitments if trade tensions continue to spiral out of control. Hyundai's growing frustration with the U.S. didn't happen overnight. For years, the South Korean automaker steadily expanded its footprint in America, building massive manufacturing plants, research centers, and supply chains to serve one of the world's largest car markets. Cities like Montgomery, Alabama, became success stories, with Hyundai providing thousands of jobs and billions in tax revenue. But tensions began escalating during Donald Trump's presidency when trade wars and tariff battles became a central focus of U.S. economic policy. Trump imposed heavy tariffs on steel, aluminum, and automotive imports, arguing it would protect American jobs and reduce dependence on foreign manufacturing. While these policies were aimed at boosting U.S. car makers, they inadvertently increased costs for companies like Hyundai, which rely on complex global supply chains to build vehicles competitively. Adding to the pressure were strict Buy American provisions and fluctuating rules on electric vehicle incentives, leaving foreign automakers uncertain about long-term strategies in the U.S. market. Some executives privately complained that the constant policy shifts made it nearly impossible to plan multi-billion-dollar investments with confidence. Now, with whispers of even tougher trade measures on the horizon, Hyundai sees a risk of diminishing returns in a market once considered its crown jewel. If Hyundai follows through with even a partial exit from the U.S., the economic and political fallout could be enormous. The company employs tens of thousands of American workers directly in its factories, research facilities, and dealerships, while supporting countless more jobs in parts manufacturing, logistics, and local services. States like Alabama and Georgia, which host Hyundai's flagship plants, would face immediate job losses, tax revenue declines, and community-level economic shocks if production were scaled back or relocated overseas. Politically, such a move would become a lightning rod in Washington. Critics of Trump's tariff-heavy trade policies would argue that his approach, rather than protecting U.S. jobs, has driven away foreign investment and destabilized an already fragile auto sector. On the other hand, supporters would insist Hyundai's threats were a bargaining tactic and that tough trade measures are needed to protect long-term American economic interests. For the auto market itself, Hyundai's exit could trigger a broader crisis. Fewer production facilities would mean fewer cars on the market, at a time when rising interest rates and high prices have already cooled U.S. auto sales. Consumers could see prices climb further, while suppliers relying on Hyundai contracts might be forced to shut down entirely. The potential ripple effects across the economy cannot be ignored. News of Hyundai potentially leaving the U.S. has already triggered strong reactions across the global auto industry. In South Korea, media outlets are closely following the story, noting that Hyundai's U.S. operations have long been seen as a symbol of the company's rise as a global automaker. Any retrenchment from such a critical market would mark a dramatic shift in corporate strategy. European automakers, many of which have faced similar challenges with U.S. tariffs and regulations, are watching with interest. If Hyundai exits or scales back, companies like Volkswagen, BMW, and Toyota might see opportunities to capture market share, but they too could be deterred if trade tensions and protectionist policies persist under future U.S. administrations. China, meanwhile, could emerge as a surprising winner. Chinese car manufacturers have been eager to expand into global markets, including the U.S. If Hyundai steps back, Chinese automakers might try to fill the gap, offering cheaper vehicles or electric cars to price-sensitive American consumers. On Wall Street, analysts warn that Hyundai's move could rattle investor confidence in the entire U.S. auto sector. If one major automaker leaves, others could reassess the viability of manufacturing in America, especially as global supply chains diversify towards Southeast Asia, India, and Latin America. The story is already shaping global perceptions about the risks of doing business in the United States. Looking ahead, Hyundai faces a critical decision that could reshape both its own future and the broader U.S. auto market. If the company chooses to scale back operations or leave entirely, the impact would extend far beyond job losses and factory closures. It would signal to other global manufacturers that the U.S. market, once considered the most lucrative in the world, now carries unpredictable risks due to trade tensions, tariffs, and shifting political priorities. Industry experts say Hyundai will likely spend the coming months analyzing U.S. policies before making any final moves. If trade relations stabilize under future administrations, the company might maintain a limited presence, focusing on electric vehicles and premium models. However, if tariffs rise or Buy American provisions tighten, Hyundai could pivot toward expanding production in regions offering friendlier trade environments, such as Mexico, Southeast Asia, or Eastern Europe. For the U.S. auto market, Hyundai's potential exit could accelerate price hikes and slow the adoption of affordable EVs, where Hyundai has been a key player. It might also discourage foreign automakers from investing in new American plants, weakening long-term competitiveness. Either way, this crisis marks a turning point for U.S. manufacturing, and its outcome will be felt globally. The possibility of Hyundai leaving the U.S. is more than just a business story. It's a warning sign for the entire American auto industry. If one of the world's top automakers is questioning its future here, what does that mean for jobs, prices, and the long-term stability of U.S. manufacturing? Trade wars, tariffs, and policy uncertainty have already shaken investor confidence, and this latest development could push the industry to a breaking point. As the world watches, one thing is clear: the future of America's auto market hangs in the balance. For more updates on global markets, politics, and breaking news, don't forget to like, share, and subscribe to the channel.